If you're not using this one concept to validate all of your trades, you are not trading properly. What I'm about to go over in this video is called SMT, which is the smart money technique. The SMT divergence is what is going to validate every single one of the trades that you take. So if you're one of those people that's entering trades and you're following your system properly to the T, but you're somehow still losing trades, I guarantee you it's because you are not using SMT divergence to your advantage. So in this video, I'm going to break down exactly what it is, how you use it, how I personally use it for my trading model, and how you can improve your win rate significantly just by using SMT divergence. So coming over to the charts, we have NQ and ES side by side. NQ and ES are correlated assets, which means they move very, very similarly, if not the exact same. However, sometimes in some moves, there is a crack in the correlation, meaning NQ might make a higher high and ES will make a lower high, which is SMT divergence. It's showing that there is a crack in that correlation where one asset is weaker than the other. So taking a look at these charts, let's go over and look at these highs and lows that were made, and we'll see if we had SMT inside of these highs and lows. So the first one that I see is down here, and you can see we clearly make a higher low here in the NASDAQ. And if you go over to ES on the same exact time, you can see it makes a lower low right there. So this is telling us that there is a crack in the correlation, and this is validating the bullish entry and the bullish trade that is incoming. Only after you get this bullish SMT do we get this massive move higher. Let's take a look at this swing low that was formed up here. You can see we make a lower low on the NASDAQ into a fair value gap. So right here is your lower low. And then if we go over to ES on the same lows, you can clearly see that we create a higher low on ES. What I'm showing you here is all bullish SMT divergence because it's taking place at the lows. We have another swing low right here. You can see from this low to this low, we have a higher low on ES. From the same lows, we have lower lows. Again, bullish SMT makes a move higher. Up here, you can see we have a lower high. So we're now getting into the sell side of the curve. We are now going to start seeing these bearish SMTs form. So we have a lower high up here. The same exact high is a higher high on ES. Again, signaling that we are going to go down or start to have a bearish bias from here. This is a trade that I actually took in real time. And you can see on ES, we have a higher high right there. And then on NQ, we have a lower high. And you can see as soon as that lower high is formed, we go and we make a new low. Again, price comes all the way back up, but before it comes up at the lows, we have a lower low. And on ES, we have a higher low. Again, you guys are starting to see a bit of a pattern here. There's always SMT at these major moves that take place. All right, drawing our attention to the current price action and why price made this move lower, you'll see we have the Wednesday, July 24th high makes a lower high with NQ. And if we go over to ES, you can clearly see a higher high, and that follows a move lower. So now that I've annotated this chart and you can clearly see we have bearish and bullish SMTs at these major swing points in order for reversals to take place. Now we can take the same exact concept and drop into lower time frames. And the main reason we're going to focus on the lower time frames here is because SMT by itself is not an entry. So you can't just spot out a bullish SMT or a bearish SMT and immediately take trades off of that. There has to be some sort of confluence, some sort of a lower time frame setup where you're taking these trades. All the higher time frame is going to do is give you narrative and direction for the lower time frame intraday trades that you're going to be taking. Now, heading into a real-time example of a trade that I actually took, we're going to go over the hourly chart on NASDAQ for Thursday's price action. So you can clearly see we are forming some sort of a high over here. This is 9 a.m. And what I want to do now that it's 9 a.m. and it's now my trading hours, I want to see, do we have SMT at any high or any low? And that will help me pick direction and pick a bias. So if we go over to ES, you can clearly see that before the down move, you can see we make a higher high. These are all higher highs on ES. Inversely, on NQ, you can see this is lower highs. So from there to there, we make a lower high. We have SMT. And on the same high from here to up there, we have bearish SMT, right? Lower high, higher high, bearish SMT. Now, like I said, this cannot be used as an entry model by itself. There has to be a lower time frame setup. So let's see, what do we have over here on the 1 hour time frame for NQ? You can see we have an order block right there that can serve as a higher time frame entry or a higher time frame point of interest. In this case, this is the 1 hour, so I would use this as a higher time frame point of interest and then frame a lower time frame trade off of this. Now, I know I'm going to get a lot of questions on this, so I'm just going to add real quick. When you have bearish SMT, you want to pick the pair that made the lower high. So in this case, you can see NQ made the lower high, it's weaker, and therefore we want to stick to the weaker pair for shorts. It doesn't make much sense to be shorting the stronger pair of the two, so therefore we're going to leave ES alone. We're just using ES there to see if we have SMT. So now that we figured out we have SMT, here's the 1 hour order block. We can go down to a 5-minute time frame, which is the aligned time frame, and see what we have over here that we can use for our entries. First things first, you can see we have this engineered buy side liquidity right under the order block. So we go and we sweep that buy side liquidity level, and we have an immediate 5-minute fair value gap right there. And now we can just see how price reacts to this fair value gap. Does it hold? Does it inverse? And right there, you can see it inverses this fair value gap. So with inversions, I would wait for the retest and then a move back down into whatever sell side liquidity we have. Your stop loss goes at the protected high, which is up there. Now that we've inversed this, we want to just simply wait for a retest and get into our short position. So short would take place somewhere around there. Stop loss can be up here. And because our stop loss is this wide, we'd want just as wide of a take profit, and we'd want to target at a minimum a 2R. So you can see to this low down here, we have a 2.3R. So this can become your first take profit. And then you can move that lower into these low resistance liquidity right there. So let's see how this trade ended up playing out. So we get the retest and the entry right there. So this is where I would be in a sell. Take my stop loss at the high, and then we'll look what happens when price comes down to that low. All right, that was pretty quick. So take some profit there, and that would be it. That would be all out. Now you can obviously continue extending this out, but that also depends on, again, SMT. Now I'm going to show you another example of a trade that I actually took here as well. Took this on live, and you can clearly see that we have this liquidity up here. The immediate high that your eyes go to is going to be the news data high. This is the 8:30 a.m. news. We have the news high right there, and you can see we go and we sweep liquidity over here, making a higher high. So let's mark out this higher high. Let's go over to ES as well, because now that it's past 9:30, we can start getting into some trades. So we have SMT. Let's go over to ES and see, did we go make a lower high for this SMT to be valid? And we indeed have made a lower high on ES. So the SMT is 100% valid. We can drop down into a lower time frame, like I said, and get an entry from a POI. So this is already the 5-minute. We don't need to drop much lower than this. We have this fair value gap right here. So I'd want to see price go and inverse this. Now, a lot of people will see a move like this, and this is where things go wrong. They will look at this and they'll say, okay, this is an order block, so I might want price to come down, retest, and then go long, right? Well, there is no bullish SMT here. We have bearish SMT. You cannot be in longs when you have bearish SMT present, and you cannot be in shorts when you have bullish SMT present. So therefore, we are not looking to long this order block. We're not looking to long this fair value gap. We're not looking to long this breaker block. No longs unless we have bullish SMT. So we wait for this fair value gap to inverse, which takes place right there. And you go ahead and you take the short on either the retest or the close. Let's just say we enter on the close, and your stop loss goes to a swing high. That candle's high right there where the fair value gap invalidates. And we are going to just go ahead and target these lows that we have down here, 1.8R. Let's see how it works out. And there you go. Before you know it, the trade is fully complete. Again, another example from today, you can clearly see right after we make that big drop, you can see we have this series of higher lows here on the NASDAQ. And if we take this over to ES, you can see we have a series of lower lows on ES. So again, this is all bullish SMT taking place over here. And we would now be able to safely look for an entry model to go long. Now, what I've showed you so far is called external SMT, where you have SMT at the external ends of a range, whether that's a range high or a range low. There is also something known as internal SMT, which will form when we have SMT at a given PD array, fair value gaps or order blocks in particular. This means that one of these two assets is going to pull into an order block or a fair value gap, and the other one will stay above it or below it, depending on if you're bullish or bearish, and that is internal SMT. So an example of that would be right here. On the 1 minute, you can see this fair value gap all the way down here. Extend that out. You can see NQ clearly pulls into this fair value gap not once, but twice. If we take the same exact fair value gap, which is right here on ES, you can see it doesn't pull into it, not even once. So that is also internal SMT, and we can take long positions off of that. So you can see on NQ, the first time it pulls into it, we get a nice move higher. And the second time it pulls into it, you get another nice move higher, but this time it gives you obviously an actual entry where you have a fair value gap, right? And this fair value gap, if we go and check the settings and go to the midpoint of this fair value gap, we close above. So this would mean once we've closed above, that this fair value gap is likely to get broken. So as soon as it closes above, you can take a premature entry anticipating a close, and you can go put a stop loss at the low and a target at whatever swing high you would like. Remember, it has to be close to 2R as you possibly can get. If it's a 1-to-1, it doesn't really make much sense to take that trade, right? And this is the exact result. Now, this is more of a hindsight example because price just wasn't very clean today, but this is how internal SMT will work. I'll show you just another example of that as well. Here's another example of internal SMT. You can clearly see we have this order block that can be identified by these two candles here on NQ. So we take that, we extend it out. That is an order block. We go over to ES. On the same candles, you have a pull back into this order block, creating bearish SMT. Now, not only does NQ not pull into this order block showing we have bearish SMT, we also create equal highs right here, which would mean that we have SMT right there as well. So we have two different cases of SMT where price does not pull into an order block and then also creates equal highs and a higher high, showing that we have double the SMT here. Now up here on the screen, you're going to see all the correlated pairs and assets. So this works with forex, this works with crypto, this works with indices, whatever you want. And you can see Euro XXX is going to be correlated with GBP. Odd is going to be correlated with NZD. The CAD pairs are going to be with CHF, and Bitcoin with ETH, obviously, and NQ and ES, the same examples that I just showed you. So start using this in your trading every day. I promise you, this is one simple thing that you can use as a confluence for all your trades that is going to significantly improve your win rate. So whenever you're looking for shorts, make sure that you have bearish SMT, whether it's external or internal. And if you're looking for longs, make sure you're looking for SMT also, whether it's internal or external. I hope you guys enjoyed, and I hope you guys learned a lot from this video. Now, a lot of you guys were asking me in my previous videos if there is a one-on-one mentorship that I offer. And yes, I have been offering a one-on-one mentorship for a little bit now. We took on initial group, and the initial group did really, really well. So we recently just opened up a few more spots, about 5 to 10 spots, to take in some more people for a one-on-one mentorship with me. In this mentorship, I will give you live coaching calls 4 times a week. You get free access to the Discord for lifetime, where I have daily live trading. You're also going to get access to a complete ICT course from beginner to the more intricate parts of my trading strategy. And more importantly, you will have accountability, not from anybody, but from me, myself. So if this is something that interests you guys, there's going to be a link in the description below where it'll show you where you can apply for a one-on-one mentorship with me. Just go ahead and click on that, and you will be guided through the entire process.